I think what they've done up to now has been absolutely the right thing. Tackling the budget deficit and particularly the burden of subsidies and public sector wages was something which they really needed to do, and they've been able to deliver that quite successfully. The growth that has been seen in Egypt over the last 12 months I think has really come from government investment in infrastructure, and that again, it's the right thing right now, but what we would want to see going forward is a shift from public investment as being the main driver for growth to the private sector. And I think that we're still a fair way from that. The survey data that we see, the PMI, are still in contraction territory, which tells us that the private sector is still feeling the impact of those subsidy cuts. Households are still feeling the impact of that. And really what we would want to see at this point is lower interest rates to try and help the private sector recover.
Walk me through what we're seeing in the Saudi Arabian market, the Tadawul, because obviously we had that MSCI emerging market inclusion, a lot of excitement surrounding that. Then it closed down about 0.5% yesterday. What's going to happen next there?
Well, I mean, I can't tell you what's going to happen today on the stock market, but overall, the outlook for Saudi Arabia is looking a lot better than it was even 3 or 4 months ago. We've seen the PMI survey data recover quite nicely in the last month or so. So that tells us that the non-oil private sector is now starting to benefit from increased government spending and higher oil prices, which are helping to boost sentiment as well. There had been quite a strange divergence between rising oil prices and exceptionally weak activity in the private sector in Saudi Arabia in the first quarter of the year, but that now seems to be catching up. I think the outlook for oil production as well is much more positive than it was even a month ago. Saudi Arabia's commitment to increase production is going to be a huge boost for headline GDP growth. If they're able to maintain production at the June level, which they've indicated is about 10.7 million barrels per day, if they can maintain that level through the end of the year, we'd be looking at a GDP growth rate of around 3%, as against the 1.5%, which we currently have penciled in.
And Khatija, when you look at the balance in Saudi Arabia compared to what you were just describing in Egypt when it comes to the public versus private investment, do you think Saudi Arabia has done a better job of encouraging private investment, or is more needed here? Because when we look at some of the huge, ambitious plans slated from MBS, a lot of this will require significant public investment too.
You're right. It absolutely is being driven by the public sector, not just in Saudi Arabia and Egypt, but in the UAE as well. In Saudi Arabia in particular, we've seen very weak private sector credit growth over the last several months. That's now showing some signs of recovery, but it's still very, very weak. I think private sector credit growth was up less than 1% year on year in May. So that does tell us that the activity is being driven by the public sector, and that again is a challenge facing all the GCC governments, is how to get the private sector engaged and becoming the main engine of growth. I think if they can continue with the structural reforms that they have outlined, then that should help over the medium term to get the private sector contributing more. But at this stage, and certainly for the next couple of years, we don't expect the public sector to be able to retrench from that investment.
Khatija, how much pressure is that going to put specifically on the UAE government? I mean, there's so many, even just housing developments now that are really banking on the idea that, you know, now that these visa rules having changed, people are going to come in, they're going to buy more, they're going to be invested in that property sector over the long term. But as you say, we've had a couple of years now where the private sector has really been hesitant to make big investments. And as you say now, you're expecting that that's not really going to change. How much of an impact is this economy going to feel?
I think if you're looking at the real estate sector, you know, you have to be quite careful, because on average, yes, of course, prices have fallen, but there have been pockets where there is still strong demand, and that's particularly in the more affordable sector. If we're looking at the UAE fiscal position overall, it's probably the strongest in the region. So in terms of the UAE government's ability to continue to invest in the economy going forward, it absolutely has the ability to do that, and that is the the thesis that we have for our growth forecast over the next couple of years is that it's going to be driven by public sector investment in infrastructure ahead of Expo 2020, as well as slightly more relaxed wage policy as well. So we've seen announcements of public sector wages as well this year, and we think that that's probably likely to continue, particularly with oil prices where they are and production set to rise. But I think the challenge that remains is, over the medium term, how do you get private sector investment up? And I do think that the structural reforms, the regulation changes that they've announced in the last month or so will help. The question is, do they go far enough, or can more be done to try and attract additional foreign investment into the region?
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.